Once all the aspects of winding up of company is completed, then the liquidator is supposed to prepare a statement called as liquidator final statement of account. This statement consists of all the assets realized by the liquidator and all the payment made by the liquidator to the creditors and to the equity shareholders. And this statement is called as liquidator's final statement of account. In this video, we are going to discuss about the format of liquidator's final statement of account. Before we begin, welcome to Sridhar's Lab. As we all know, liquidation is nothing but termination of the legal existence of the company. If a company is undergoing liquidation, then liquidator is the official person who is supposed to realize all the assets of the company and make payment to the creditors of that company. While paying liabilities of the company, the liquidator has to follow a prescribed order in which the payment has to be made. So the payment has to be made in that particular order only. So the liquidator's final statement of account is the statement which is prepared to show the receipts and payment which is made by the liquidator. The receipts column shows that all the assets realized by the liquidator, and the payment side shows that the order in which the payments are made by the liquidator by utilizing the assets realized amount. Now let us understand the format of liquidator's final statement of account. So to begin with, so the receipts, first of all, whatever the assets are being realized by the liquidator has to be entered. So basically the cash in hand and cash at bank are readily available in terms of cash, that has to be entered first. So cash in hand and cash at bank are already in a realized manner, so that has to be entered. After cash in hand and cash at bank, then the assets which are realized by the liquidator has to be entered. For example, so marketable securities, bills receivable, trade debtors. So these are some of the assets which could be there in the company, and he has realized these assets. This is just an example. If these assets are realized by the liquidator, these assets are entered here under assets realized. If there is any calls in arrears in the company, then the liquidator has to collect that money from the concerned shareholders who have got calls in arrears. If that shareholder is not paying the calls in arrears money, then the liquidator will not pay the capital repayment to such shareholders who have got calls in arrears. So that means their shares will be forfeited. So here the liquidator will be collecting calls in arrears amount from the shareholders who have got calls in arrears. Once all the assets are realized, and if any calls in arrears are there, if it is collected by the liquidator, then the liquidator will initiate the payment. So when he is initiating the payment has to be made as per the prescribed order itself. So this payment procedure has to be carried out according to the provisions of Companies Act as per the prescribed form only. So therefore, the first person to whom the liquidator will make payment is the secured creditor. Secured creditors are those creditors to whom an asset is given as a security. So here an asset is given as a collateral security at the time of obtaining a loan. Examples of secured creditors involves mortgage loans, and also if there is any mortgage debentures, which are also called as debentures having fixed charge. These are all examples of secured creditors. After paying secured creditors, next the liquidator has to pay the legal charges. Legal charges here includes any expenses incurred in relation to registration or any stamp duty incurred or any other litigation expenses which are incurred will be paid here. So the legal charges are given the second priority at the time of payment by the liquidator. After paying legal charges, the liquidator has to pay the liquidator's remuneration. The liquidator remuneration depends upon in what context the liquidator remuneration has been paid. Suppose it may be paid on asset realized. Here, asset realized means these are the assets which are realized by the liquidator. So these assets which are realized by the liquidator, based on this, liquidator remuneration may be paid. Say for example, if they say 2% on asset realized, then taking the total of the assets which are realized by the liquidator, based on this 2% has to be given as liquidator's remuneration. Similarly, sometimes the liquidator remuneration may be based on the payment as well. Payment may be, for example, payment made to unsecured creditors. Sometimes the liquidator remuneration is also based on payment made to preference shareholders, payment made to equity shareholders. Likewise, sometimes the liquidator remuneration may also be the combination of both asset realized and as well as the payment made. The next payment is liquidation expenses. Liquidation expenses include any cost which are incurred in relation to auctioneers or valuer charges, or any cost in relation to possessing an asset or maintaining an asset will be considered under liquidation expenses. Along with that, any cost which are incurred in relation to giving notices in gazettes and newspapers, any establishment charges, and any other incidental charges which are in relation to liquidation will be considered under liquidation expenses, and this will be paid after paying the liquidator's remuneration. The next payment is debenture holders having floating charge. The debenture holders having floating charge is the one where these debenture holders do not have specific charge on any of the assets of the company. Such debentures has to be paid after paying the liquidation expenses. Here, firstly, we need to pay interest to these debenture holders. If there is any outstanding interest, that has to be paid. After paying the outstanding debenture interest, then we need to pay the debentures amount. After that, the next payment is to be to the creditors. These are the creditors who are not secured and no asset is being given as security to them. The creditors can be classified into two. One is preferential creditors. Preferential creditors are those creditors which consists of various payments like any amount due to government in terms of taxes, or any salary or wages due towards the employees or laborers of the company, or any amount due towards holiday remuneration, any amount due in terms of ESI payment, any amount due in terms of compensation in case of death or disablement, any PF or pension fund or gratuity fund due from the company. These are considered as preferential creditors. After paying preferential creditors, unsecured creditors has to be paid. After paying unsecured creditors, calls in advance, if any, has to be paid. If any shareholder has paid the call money before the calls were made by the company, Such call money is called as calls in advance. If any calls in advance is there, after paying the unsecured creditors, the calls in advance money has to be paid by the liquidator to the concerned shareholders. The next payment is to be made to the preference shareholders. So, while making payment to the preference shareholders, if it is a cumulative preference shares, if there is any arrears of preference dividends in the past years, that has to be paid first, and then after paying the arrears of dividend to the cumulative preference shareholders, then the preference share capital shall be paid. If there is no sufficient funds to pay till preference share capital, then if the shares of the company is been partly called up, in that case the liquidator has to call for shares. So that is calls on shares from the contributories. Here, once the calls are made, the call money has to be collected so that the amount can be paid till preference share capital if the amount is not sufficient to pay till preference share capital. The liquidator has to make calls on shares only if the amount is not sufficient to pay till preference share holders. If the amount is sufficient to pay till preference shareholders, then no need to make calls on shares. Here, the payment made to secured creditors till preference share capital is considered as payment made to outside liabilities. After making payment to all the outside liabilities, that is till preference share capital, if at all if there is any amount available, then that amount has to be given to the owners of the company, that is nothing but the equity shareholders of the company.